Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of May the 16th, 2016. Now, once again, a fairly busy week last week. I talked extensively in last week's Forex Weekly Outlook that I did not support the position of the major market analysts, saying that it was a weaker labor report and the dollar would weaken. In actual fact, I took the opposite view of that, based largely around the VantagePoint indicators and the basic fundamentals inside that labor report, that I actually felt that it was a good report. And not surprisingly, that showed up as dollar strength against the euro, the British pound, the Canadian dollar, and even the Aussie and the New Zealand. But next week we may not be looking at the same thing. Now, our key vantage point level is 94.09. We've closed the week at 94.59, a very bullish close, but we do have some issues here. Now, when we look at it from last week's Forex Weekly Outlook, we can see that we've formed a bottom down here at 92, and then on a number of the vantage point indicators, the predicted short, medium, and long-term differences, but the medium and long-term difference signal here, the medium-term predicted difference crossing over the long-term predicted difference, basically told me that the technicals were supported by my interpretation of the fundamentals, and hence the dollar rise. Well, it would spend the rest of the week on the rise for the most part. Now, our neural index has been a little choppy back and forth here, but our predicted RSI 65.9, suggesting we could see further US dollar strength. Now, what I'm looking for here is the predicted medium and long-term difference to hold above this zero line, and even the short-term predicted difference and the strength indicator. When we look at our individual crossovers, our short term is up, our medium term looks good, and our long term looks quite good here. Now, we've also managed to break through this trend line. My issue that I have with this is that I felt that the dollar was maybe a little bit overbought on Friday, and we're going to have a corrective move lower. But the key thing is we want to hold above that 94 level, which is consistent with that VantagePoint 18-day predicted moving average. Now, a concern for a dollar rally here next week also is the current signal we have on the S&P 500. In the last several Forex Weekly Outlooks, I've stressed to everybody the high correlation the dollar has to the S&P 500 and the DAX, meaning that with those equities going up, the dollar's going up. But if the equities are going down, the dollar has been going lower. So right now we've got good trend line support coming in about 2030. So as long as we hold above 2030, then the uptrend in the equities and the dollar is still pretty much in place. But if we start breaking through the 2030 level on the S&P 500, that is likely going to push the US dollar lower, not higher. Now, 2061, we've closed at a very bearish close of 2043 on the S&P 500. So this is where your focus should be next week, guys. Keeping an eye on the S&P 500 and, of course, the DAX. Now, we have two different signals forming here. The S&P 500, we can see the medium term predicted difference crossing the long-term predicted difference, sending the S&P 500. Now, to further demonstrate that, we can see that this crossover point is taking place right here. Now, with that, we can also see that we have a base forming off of this trend line, and the market with the predicted differences have both moved higher. Now, right now, where it looks right now, we do have a triple EMA cross to the downside, 2061 being that resistant, but the Fed has constantly come in at this level. Now, our predicted medium-term difference is turning lower, but it has not crossed over the long-term predicted difference in this particular section. Now, the position of the predicted RSI is absolutely a problem here as it starts to push through the 40 level. Now, that usually indicates momentum, so we definitely want to be cautious of that. Okay, guys, that's the problem here. Now, we look for the DAX 32 to recover. The DAX 30 has come down and it's kissed this trend line at the 98, and it's bounced aggressively off of this level on Friday. That's a good sign. As long as the DAX is moving up, the euro currency is moving down. This is the correlation I want you guys to remember. This is something I discuss with my own direct clients on a regular basis, that this is what you need to understand, is that there's an inverse correlation between the euro currency and the DAX. So one goes up, one goes down. So if this can get moving, then we could see the euro US continue to sell off. But I'll talk about that in a minute. But Again, right now we're looking at the divergence in the VantagePoint indicators here, which is slightly different, I would say, than what it is on the S&P 500. We can see this medium-term predicted difference crossing over the long-term predicted difference right here. We have a trend line forming off that, and as long as the medium and long-term predicted differences remain separated, we still have a chance for this to move up off of this level right here. Now again, we're watching it very closely. The neural index is down, but the predicted RSI right here you can see is starting to rise, which could be a very strong benefit for the DAX to recover and the S&P to recover. So we want to keep that in mind. Now with oil has come up. We've pushed right up against this upper trend line that I've talked about, that I feel that basically oil is trading in a more or less in a range right now, basically between 48 and about the $40 per barrel mark. That's the key level right now. VantagePoint's key support level, 44.99. Now once again, we have a very conflicted signal here. Our predicted RSI is moving higher, and we can see that our medium term is crossing over our long-term predicted difference just above that zero line, suggesting that oil is going to advance next week. Now, don't get mixed up with too much on Monday trading. Focus on Tuesday, Wednesday, and Thursday. These are your big trading days, particularly Wednesday. So for now, the uptrend, the recovery in oil, I should say, not an uptrend. It's clearly in a strong downtrend, but it is trying to recover. And when we look at this, once again, from 1 year ago, we can see that basically oil remains stable up around $75, $80 a barrel, predominantly very strong right up until the end of June, beginning of July. And then by basically mid-July, oil just started to plummet, and it has never recovered from that sell-off from 1 year ago. There is still an awful lot of supply in the market and very little demand in the market for oil, and so prices getting back up above $50 a barrel is going to be a stretch. So probably not a bad looking short here, midweek on oil. Now, same thing applies to basically gold here. You can see that gold pretty much topping out just above this $13 or $1,300 per ounce, I should say, excuse me. Now, when we look at the indicators from VantagePoint, once again, a very powerful indicator is to watch the medium term crossing over the long-term predicted difference to the upside of the downside. Now you can see with a top in place right here, when that crossover took place on that medium and long-term predicted difference, there was absolutely zero lag on this, guys. Nothing. The very next bar, didn't matter which one of these bars you sold, you're making money, okay? And again, I don't really support excessive long trades on. There is gold's been having a decent year, don't get me wrong, but we're still in an interest rate cycle, rate hike cycle with the US, and fundamentals don't support stronger gold prices at this time. So we want to watch things like this. Now, right now, you can see a lot of activity around this zero line, but we don't have a crossover back to the upside. So this crossover here that's taken place, that's a very important one. And again, even if we look at this indicator by itself, the medium term crossing over the long-term predicted difference, that led to a very substantial move on gold from 1320 all the way down to 1250. So a very nice move there. And this is what we want to basically, make that our focus here, is that we understand, why these things are happening. Very, very critical. Now, gold is sitting currently sitting on a very powerful trend line at about the 1250 mark, 1260. So watch this area very closely. If we break through this trend line, that's going to signal probably some fairly substantial US dollar strength. Now that triple EMA cross is holding 1269. We've closed at 1272, so it's not a clear-cut runaway for further dollar strength here by a long shot, to clarify. Now, as we come into our euro currency, you can see here that we've had a trend line break. We've got a triple EMA cross, a lot of activities to start the week at the 1362. Now, for the DAX, for Euro US to keep going lower here, guys, understand what it's going to take for it to keep going lower. It's going to need gold prices going lower. It's going to need the DAX 30 to continue to advance higher. If the DAX can't move higher, the Euro US will recover and start moving back up. Now, once again, to point out that divergence that I've talked about here today, we see it again right here on this long-term, medium-term predicted difference crossing over the long-term predicted difference. Once we have a top in place, we sell the very next bar right here based around that VantagePoint signal, and down we go. So this is an excellent way of looking and utilizing the software with that medium-term crossover and the long-term crossover. Right now we remain below the zero line, so we're below there, that leaves a downward bias. Our neural index is fully supportive of that, as is the position of our predicted RSI as we break through that 40 level. Now, once again, I don't like to use a lot of indicators in their conventional fashion. I'm not looking for overbought or oversold signals per se. I'm looking to play momentum, following those algorithmic systems, how they buy and sell at will. So in this particular case, again, what the trigger is going to be for Euro US to move lower is the DAX must move higher and gold must move lower here. That's just the way it is, guys. That's the intermarket correlation that will drive this pair. So clearly we have a downside bias for next week. We are likely going to retest the swing low down around this 112 area, but watch 113.62 very closely. Now, as we get into US Swiss franc next week, this is a Euro US trade here, guys. The key level 96.94. I'm not going to spend a lot of time on this because it is the same as the Euro US trade, just simply inversed. So as long as the DAX 30 is moving higher, US Swiss franc is moving higher. As long as the dollar index is moving higher, US Swiss franc is moving higher. So these are the key things. Now, once again, pointing out some very critical divergence that I look at, because even some of my own clients last week questioned my call on longs on US Swiss franc, but you can see that divergence right here, that once we've made a bottom on this particular bar and we've got the medium term crossing over the long term predicted difference with a rising RSI above 60, this tells me this is clearly a buy zone. From here, we've actually moved aggressively higher from basically anywhere in this 95 area all the way up into the 97.50. So we're going to look for that potentially to continue for next week, but it's going to be a very choppy trade. But for next week, the way I'll leave it is longs will still be in place while above 96.94. Now, when we get into the British pound US dollar, again, a very tricky call here on this one for next week. It will be driven still by the BRI exit, still by oil prices. Predominantly, the British pound has a decent month of May. When we look at it from 1 year ago, we can see that we basically hit a bottom at about the latter part of May, and then we rallied from basically 150 all the way up to 160, so about 1,000 pips. So again, we're going to be looking, into that first part of June. We've probably still got a little bit more downside here, but if in order for the British pound to move lower, then oil prices are going to have to move lower. Now, oil is at the top of that range, so that's very likely. What does concern me here with this particular trade this week that I'll bring to everybody's attention is the signal we have right here. We have a medium term predicted difference crossing over a long-term predicted difference. In most cases, this signals that the market is getting ready to turn up. So I'm not saying that's going to happen on Monday or maybe not even on Tuesday, but it's a warning sign that this could be getting ready to turn. Our predicted RSI below 40 is saying that is not going to happen. You can see right here we have a trend line break at this particular area here, and that's telling us that we are probably going to move, but in my opinion, to the downside. But in my opinion, again, we've had too big of a move here on Friday, and this is based around the retail sales that was a decent number. So, we're going to look for a corrective move, but the question is, can the market hold under the key VantagePoint level at 144.31? So to start the week, obviously shorts into the 144.31 would be the realistic play, but again, watch this signal that I've talked about here with the medium term crossing over the long term predicted difference. I can see on many other occasions here that when this has happened and it's led to a fairly substantial move in the opposite direction of what the market thinks. So for now, shorts do carry the edge, but only while we're below 144.31. Once we get above 144.31, we get back inside this lower trend line, then look for this pair to start to rally higher. That may not be this week. I think the British pound is just going back and forth. This is what we're going to be doing until we get into the vote on the Brexit, whether the UK is going to leave the the European Union. I don't think it's going to happen personally, but it might. And as long as there's the fear that it might happen, it's keeping the British pound weak. So we have a little bit of trouble controlling that to some degree. Now, as we come into the dollar yen, our current range here, guys, 110.90 and about 105.80. This is the range we're playing. You can see that once again, we've got a lot of sellers just kind of camped out here around the 109.60 area. So we've got to break free and clear of this resistance here in order to get to the 111 area. Now, once again, you can see that I'm just going to bring this up again so everybody can understand where I'm getting my signals from. Our medium and long-term predicted difference right here. You can see that when the medium term crossed over the long-term predicted difference, this led to a very substantial rally right here from basically 106.50 all the way up to 109.50. A very nice move. Now you can see that the medium-term predicted difference starting to turn lower, so we could have a problem here. Predicted RSI, we did not get above that 60 level. We are basically backing away from that area. So the RSI needs to recover. Now, what it's going to take for the dollar yen to continue to move higher is the equity markets. If the equity markets reverse and start moving higher next week, the dollar yen will follow. It will fall into line. Okay, so that's what we're looking for next week. That's our key driving factor. Our neural index is down. Again, the strength indicator, the predicted long-term difference, they're very conflicted on this pair. So we're looking for, once again, a recovery in those equity markets so we can buy dollar yen. But if the equity markets, if the S&P 500 starts breaking through the 2030 area, you get those shorts into this pair right away because it's going to be a very, very easy trade. Okay. Now, as we get into our final three pairs, our commodity currencies are all a very similar trade. USCAD, Aussie, US, New Zealand, US, they're all labeled as commodity currencies. The USCAD, I've talked about this last week. I'll talk about this same level I talked about last week that I've discussed with my own direct clients, right around the 129.90 area. We've poked above there very briefly and then immediately retreated back into there. On Thursday, you can see we came down, kissed the VantagePoint 18-day predicted EMA at 128.21, and then aggressively came off that key VantagePoint level of 128.21. So for next week, longs do carry a slight bias here, we can see, but once again, we've got a potential problem. Okay, and this is what most analysts probably, they don't even see it, they're not talking about it, but we want to be very careful here. This is what concerns me. The medium-term predicted difference crossing over the long-term predicted difference. This is a classic divergence that could be very problematic. And even though this signal looks fantastic, this signal here is suggesting we could be getting ready to move lower very soon. So we have a very strong trend line coming in just under the 130 level. We need to break through that, guys. We need to break free and clear of 130. When we do, we will go up to this level here at 132 very quickly. But we must get through that trend line. Or excuse me, at this point, it's not even really a trend line. It's a swing high that's acting as a trend line that the market is selling into. So again, our neural index, our short-term predicted difference in strength indicator back above the zero line right here, that's a positive, but we still have issues here. And again, this signal with that medium-term predicted difference crossing over that long-term predicted difference is it's a problem, to say the least. Now, our short-term, when we look at our individual crossovers, our short-term is crossing back to the upside. Our medium-term and our long-term still look good, but we must break through this level, guys. So as long as you know your levels to start the week, be very careful around 130. Once we get above 130, we should be able to basically have a breakout move towards 132. So that's a case where actually with myself, my own direct clients, that I would say we would actually be buying the 130.20, 130.40, 130.50 once we have a confirmed break, but we don't have it yet. Okay, and that medium-term predicted difference, to give everybody a huge warning sign, there could be a fantastic short on this pair too, if this signal here is accurate, that it's picking up on something based around those correlation to 25 other markets that, you know, some of the other systems are not seeing. So be careful of that one, to say the least. Now, as we come into the Aussie basically going into free fall. Our trend line is getting very tight here. It's now coming in at about the 73 mark. We've closed out at 72.67. If we can break free of this trend line, we're probably going to retrace back towards the 74.60 mark. And once again, you know, I'm going to discuss this throughout the webinar, is looking at basically divergence areas. You can see that divergence area right here, the medium term crossing over the long term predicted difference. We're now moving into oversold territory here also. So we could see a break here. Our RSI, predicted RSI, is at 15.9. Grossly oversold. That does not mean that this can't go lower. The indicators still suggest it's going lower, but we are seeing some divergence here with that medium-term predicted difference, which could send this pair higher. So once again, we want to make sure we're looking at everything, not just one or two things, to get a good evaluation. Now, when I look at the short-term crossover here, using the VantagePoint software, again, we're starting to narrow, but our medium-term is getting oversold, and our long-term is also getting oversold. So the further the blue line moves away from the black line, the more likely we're getting ready to retrace. And again, this has absolutely nothing to do with Fibonacci, Elliott wave, or any of this, guys. You're simply basically running out of sellers here. That's what's going on. You know, it's a zero-sum game. That's what all trading is. And it comes to a point where there's simply no sellers. And then the buyers start taking over. So that very well could happen very, very soon. Now, we did have a new trend line that formed off of here, off the lower base of that, but you can see we pushed through this. But again, watch these levels on Monday very closely. But we could begin to stall out right around this 72 area. So watch for a potential buy, because our predicted medium and long-term difference are telling us that this downward move is absolutely running out of steam. So good potential long here, short-term long trade for next week. And I'll say the same thing for New Zealand. Very similar currency, but we have a more predominant signal from this one. When we look at our medium-term predicted difference in this area right here, we are in oversold territory. We have the medium-term crossing over the long-term predicted difference to the upside. Now, our neural index is down, that's true, but we have a very strong trend line down around 67.20. So I would be looking to buy down around this area for a retracement back to this key VantagePoint 18-day predicted moving average, which comes in at 68.46. Now, if we can get through 68.46 next week, guys, then we can start looking at targeting back towards the 70.50, the upper part of this trend line, back up in this area here. Very strong possibility that that's going to happen. Now, the predicted RSI, you can see a little conflicted, but now it's back down at the 35 level here, so 35.1, which suggests we're going to get another move to the downside. But guys, when we get that move down, we want to be getting ready to potentially buy this based around that signal right there, the medium term crossing over the long term predicted difference. I think we've got something brewing here. So we want to make sure that, you know, we can take advantage of these opportunities ahead of the market. And again, with a fresh new trend line coming off that 67.20 area, that's the area that I would look to try small longs to begin the week, and keep your stops down around 66, basically around 66.20, 66.30. You know, you're not going to, in most cases, you're not going to do well trading with a 20 or 30 pip stop loss here, guys. Not in these kind of markets. You've got to allow the trade to breathe a little bit and make sure you're in the market and putting yourself in position for what's going to happen, and not be concerned with what's currently happening.